When you think about just trying to generate consistent returns right now, you think about the volatility in the equity markets. It's tricky, it's challenging. So the CEOs, the CIOs are looking to real estate to fill a bigger and bigger weighting in their portfolios today than really ever before. So that's a trend that's not going to change in the short term. So watch for this to grow as we go forward. We've never seen the capital markets so deep for institutional and private capital, primarily domestic, but also global capital trying to get into this country. So just trying to find a home for it, it's a real driver of what we're feeling right now. And as the markets get that competitive, you start to think about where else can I execute? Again, thinking about all the reasons why Canada makes for a great investment thesis, it will see and drive more money here. The domestic players have that little extra and inherent competitive sort of understanding of the market, which allows them to move quicker at this time. But once the global groups build local teams, once the global groups really focus on Canada, once they establish the relationships here, that's when the game changes. If you look back just a couple of years, it was a story all about the REITs. Now it's a story primarily about the pension funds. They will continue to drive this market for an extended period of time. The high net worth, the private developers in deals sub $20 million still dominate. But I think when you look at the headline deals, this is a world that will be dominated by the big institutions. The number of calls we're taking, the idea of how many groups are trying to put money into this country at this time, it's really surprising. In 2004, 5, 6, it was about the open-ended funds from Germany coming here. Now it seems to be about different parts of the world, Asia, Middle East, wanting to come here. You can never ignore the US because as that market gets more and more competitive, you're going to feel them come up here. If you think about London, more than 50% of their domestic trades are global capital sources coming in. In my opinion, it's only a matter of time till the same thing happens in Canada. As I look forward and you think about the challenges that we all face, so our business, the real estate markets in general, the change in interest rates will be the big one for us all to deal with. I think that 2015 we're probably relatively safe. After that, it all depends on what does the US do? How does their growth dictate an increase in interest rates? How does the rest of the world dictate a need for a growth in interest rates? We have to be ready, we have to be careful. There's a lot of things you can do to prep a company and a portfolio to be set for this, but we all have to be thinking about it. If you think about interest rates going up, what you have to do is be able to offset that with an increase in your rents. So you need to be winning the battle of the tenant right now. First thing you need is retention. When you can retain tenants, that's half the battle because your costs are managed. Downtime, it's tricky. So if you can do a better job servicing the customer in your building, if you can do a better job building the relationships with the tenants, that's something where you will be able to increase rents, you'll be able to maintain your occupancy better. So those will be the groups that really come through any kind of adjustment in the interest rate world better than others.